So I'm considering increasing my portfolio of NVIDIA. The stock market's gone down quite a bit, and I can get these maybe at a little bit cheaper price. I was assigned these from a cash secured put, and my average cost is way up, and I haven't been able to sell covered calls and get any sort of premium. And I'm thinking if I pick up another 100 shares, I could average down. So if I did like a cash secured put now, because the stock has been down, it's starting to climb up again. Cash secured put, if I go just a week out and I go down to 118, the delta's too high there. I probably want to go down to a very low delta, 13. I could pick up $72 premium. This delta is 16. I could pick up $88 premium. I don't know that anything's possible, but it's hard to imagine it's going to go back down to 110. So if I did that, that would average out my 129 that I have these at now, plus 110 divided by 2. That would put me at 119. So if I did pick those up and the stock went down to 119, I could sell calls and I could go like 120 and collect some juicy premium here. So reducing my average cost by picking some up possibly at a lower price and averaging my cost plus picking up some premium to do that sounds like a kind of a good idea. So I'm thinking about that. The only thing I'm not sure of is the rate cut that's expected from the Federal Reserve next week. I think it's on Wednesday, and I don't know if that's going to make the stock market jump way up or go way back down, crash. Who knows what's going to happen? I know real estate prices will probably be up, but the stock market, I'm not sure. Let's ask ChatGPT. Will the Fed rate cut of 25 points raise or lower the stock market? Typical rate cut at 25 points typically tends to be bullish on the stock market. Lower interest rates can make borrowing cheaper, potentially boosting corporate profits and encouraging consumer spending. It can also make stocks more attractive compared to bonds. However, the actual market reaction can depend on other factors, such as the current economic environment and other factors, blah, blah, blah. If the cut is seen as a response to a weakening economy, the market might react more cautiously or negatively. I don't think that's the case. The economy is strong right now. So I'm going to take a little bit of a risk here and say I'm going to go down to a delta of 10, which is very unlikely. There's a 90% chance that this is not going to happen. Go down to a price of 107. If it does go down to 107, I'd be happy to pick up 100 shares of NVIDIA. That would give me 200 shares. I think this stock's going to skyrocket in the future. Pick up $53 in premium. Seems like a good deal to me. And then at 107, if I average my current cost of 129 plus 107, it's 236 divided by 2 is 118. So right now it's trading at 118. So I could actually sell covered calls higher than that and make some profit on the difference between 118 and selling calls higher. Plus the premiums, as we saw before, are really juicy. So I think this might be a good move. I'm going to do it. Put that in my sheet with the extra $53 in premium. That puts me up to $1,037.97 for the month so far. And that's it. Is ChatGPT a good financial advisor? We'll see, but this is not something I recommend to you. This is just me tooling around, trying different things. This is not a recommendation or something that you should do. It's just something that is for me to do for entertainment. I think it's going to work out in either way. I've made $53 premium. If I don't get assigned the shares, if I do get assigned the shares, I get assigned at a great price, and then I can sell covered calls. So let's go look at sell calls. If I was selling calls right now on NVIDIA, expiring a week out at 118, if that was my cost, I could go up to like 121, make the difference between 118 and 121, plus I could get this premium of 292. Or I could go 120, make 340. So that's pretty good. This is the market conditions right now. This is subject to change at the expiration, of course, of the put that I have now. But it puts me in a better position because my cost is so high right now with the shares I own, averaging down by buying more shares at a lower price, maybe, and getting paid to do it. Well, that's it for this video, and we'll see you on the next one.